Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we have a lot of different topics to go over. There's a lot of new news articles that I want to go over. And first, before I dive into any of that, I wanted to give a shout out to all of you guys that watch my videos, and especially the 7 people that have now used my referral link. In the last 2 days, we've had 4 new successful referrals. So 7 people. I never imagined that ever would have happened this much, this fast. The YouTube channel has been up about a month and a half now. So those of you that are interested, like these 7 that did use the link, make sure to use this link down below if you're interested in using M1 Finance. And we can each get $10 and you can start that with your dividend portfolio, and I'll make sure to thank you in the video. So usually to start off my videos, I usually give you guys an update on my portfolio. I'm going to be doing that at the end of the videos now. That way we can get right into the news pieces. And those of you that are interested in seeing the update on my portfolio, just fast forward towards the end of the video and I'll give you guys an update. So to get started, AMC stock soars after report Amazon held merger talks. So apparently, Amazon is in talks of buying out AMC and merging with them. So this is really interesting because Amazon has a history of purchasing a lot of other big companies in the future. They own a lot of everyday brands that I'm sure a lot of you guys didn't even know that they owned. They own things like Zappos, they own things like IMBD, Twitch. They own so many other things. In their most recent purchase in the last couple of years or so, they bought out Whole Foods. Now, when they bought out Whole Foods, there was a lot of controversies. People didn't know exactly whether or not that was a good move. And looking at this with AMC, comparing that to Whole Foods, so I want to point out the two differences between those two. So with Whole Foods, there is a long-term trend of people going more and more clean, healthier results for their eating habits. People are going more vegetarian, people are going more vegan, people are eating less and less meat, they're caring more and more about where their food comes from, GMOs, things like that. But with AMC, the long-term trend for movie theaters and the entertainment systems for public areas in general are going down. So I really wonder if Amazon has a strategy here that is going to take AMC off the map. I wonder if they're somehow going to collaborate with their features with Amazon Prime Video and somehow bring that to the movie theater. I don't know. There's really a lot of different ways that they can play this. The good news is that if there's any company that could take AMC out of the gutter, it would have to be Amazon. They're one of the most powerful, most largest companies in the entire world. So if there's any company that could do it, it would definitely be Amazon. The stock AMC shot up 30% to $5.32. I believe actually at one point during after hours for just a brief second, I believe it was actually up like 50%. Its highest close since March 4th. Trading volume spiked to 105.2 million shares compared to the full day average of about 9 million shares. So the moment that this news was announced, and this was in after hours, it literally had its volume spike up by over 10 times the entire day's worth of trading. So people obviously are looking for a way out. Those who are AMC shareholders have had tons of horrible things happen to it. For example, I know we went over AMC a couple weeks ago. We were talking about them potentially hiring a bankruptcy law firm for a Chapter 11 bankruptcy. Their dividend has already been cut from 20 cents a share down to 3 cents a share, almost a 90% cut. That's 85%, I believe, if I do that in my head. And over the last 5 years, they're down 84.39%. And in the last year alone, they're down 65.93. And even here again today, almost another double-digit day down. So it has been very, very bad if you're an AMC shareholder. In a similar sense, let's look at Simon Property Group. Let's look at SPG. So the reason why I'm a little bit confused on the Amazon purchase for AMC, potentially, if they go through with this, is that when you look at shopping malls, which a lot of AMC theaters are in shopping malls, there's already been a lot of worries, a lot of troubles here with shopping malls. Simon Property Group is the largest REIT in the world when it comes to shopping malls, and they just bought out Taubman, which is a lot larger purchase than what they previously have done compared to other past transactions. But Simon's Property Group has had horrible returns over the last 5 years, down 72% over the last 5 years. Over the last year, they're down almost 71%. This dividend yield is already a red flag. This is a company that is a little bit well run compared to most malls, but even in the biggest of players in the mall space, these guys are struggling horribly. They're down to a $15 billion market cap, which is a fraction compared to what they were just a couple months ago. So I'm not really sure what Amazon is planning on doing, but we'll see there. Honestly, just for the hype and excitement, I hope they do it. So let's see where it goes from there. So just about a week ago, I posted a video on my YouTube channel, and it was talking about why I do not invest in energy companies. Someone commented on my YouTube channel. They asked me, the Millennial Investor, Do you never go over any energy dividend growth companies? Why do you not go over these? Are there any that you would recommend? I'm looking at adding some of them to my portfolio, and I basically came out and said, no, it's not a reliable industry that I'm interested in getting in. Relying off of a company that relies off the price of one thing, the commodity that it sells, is not something that I'm looking to own. And in that video, I broke down primarily three different companies. I broke down Chevron, I broke down Exxon, and I broke down a smaller company that hits close to home to me, and that's Chesapeake Energy. So Chesapeake Energy, in that video, if you go back about a week ago, I said that I believe Chesapeake Energy will probably be bankrupt within the next year or so. Chesapeake Energy stocks plummets as price target /0 amid strong sell rating at CFRA. So I know today it is already down another 14.33%, and on the day that they announced that news, it was down another 22%. So just in the last 2 days from the time I'm trying to film this, they're down 30+%. One of the things that I don't believe is covered in this article as I read over it is that one of the analysts that covers Chesapeake Energy actually cut its price target to 0. Now, a lot of times with analysts, you see a lot of very high or very unrealistically low prices set for the price target, but it's very rare that you see a price target set to 0, that an analyst is basically just comes out and said, yeah, this company's going bankrupt. So in that, Chesapeake Energy potentially looks at going bankrupt, as it says that the downgrade comes after an oil and gas company issued a going concern warning in its latest quarterly filing, citing volatility in commodities prices as a result of the COVID-19 pandemic and the likelihood that a restructuring or reorganization will be needed given high debt levels. We do not expect Chesapeake to be in compliance with its financial covenants beginning in Q4 of 2020, which will result in an act of default on the credit facility. So this stock has been absolutely plummeting. I went deep into this in my last video last week that I was talking about. So if you want to go over my reasons there, and I'll dive deep into it and you can look at the information. But basically, just to give you the highlights, this company has $7 million in cash and $9 billion worth of debt. So their debt is literally over 1,000 times higher than that of its cash. This company used to be one of the largest producers of natural gas in the country, and they still are a large producer of it. Not only has crude oil went to astronomically low prices, with crude oil futures going to -37, and we also have natural gas going to historically low prices, with the recent winter being very mild, and producing natural gas has been at an all-time high due to natural gas drilling. Now, there is one positive thing, if it's even a positive thing, because who knows if Chesapeake will even be able to last that long, is that when crude oil drills, it naturally produces natural gas. It is a byproduct. So whenever there's crude oil, there will always be natural gas. Now, the good news is that a lot of these smaller companies, like your Chesapeakes, as they go bankrupt, as they start producing less, that means that there will be less natural gas in the market. So that means there will be a lower supply, and that means that demand will theoretically stay the same, and that will drive the price up. Now, in the meantime, while that's happening, who knows if Chesapeake Energy will last that long? I doubt that they probably will. Now, I don't want to try to make this out as an, oh, I told you so type of video. Me, of all people, I, for one, want Chesapeake to stay alive. I hope they do fantastic, and for the main reason, the state of Oklahoma has thousands and thousands of people employed at this company, and I do not want to see it go under. That said, I don't really see any upside for this potential, and if you had to own one of these two, which both of the companies are pretty horrible stocks to own, I would definitely be picking AMC over Chesapeake, regardless of whether or not Amazon takes it over, because Chesapeake is almost a guaranteed bankruptcy, and at least AMC, if they were to have some good management decisions and restructure their business, they could potentially come back out on top, but who knows. So the third piece of news that we're going to be going over here is a company that I own, AT&T. It is about 2% of my portfolio. We are just now down on the position. We're about break even. This company pays massive dividends. And the AT&T boss, or CEO and chairman, retires with a $274,000 a month for life. So in recent news with potential stimulus checks being passed, and one of the numbers that I usually see thrown out all the time with the House giving a proposal for is $2,000 a month. Now, who knows whether or not that'll be passed? I don't think there's a chance in hell that it will pass. But let's say that you got that $2,000 a month for several years or even for life. Imagine how far you could get with $2,000 a month till the day you die. That's a lot of people's retirement for Social Security. So think about 274,000 over 100 times that amount, almost $250,000. He could buy a brand new mansion in cash every single month. That is insane. You could buy an excellent house in cash every month. That is insane. So, not everyone gets personally insulted by the President of the United States when they announce their retirement. But when you're walking with a pension plan big enough to buy a typical U.S. house every single month, yes, really, do you really care? AT&T Randall Stephenson landed a complimentary insult from the chief executive of the United States 2 weeks ago when he announced he was standing down at 59. Great news, Randall Stephenson, the CEO of heavily indebted AT&T, which owns and presides over fake news, CNN, is leaving or was forced out. Anyone who lets a garbage network do and say the things that CNN does should leave ASAP. Hopefully, replacement will be much better. Now, these are always funny to read. Now, regardless of whether or not you're Republican, you're Democrat, whether or not you love or hate Donald Trump, good God, this guy needs to have his Twitter taken away. The amount of ridiculous tweets that you see posted all the times about stock market, about companies, there's so many crazy tweets that he puts out all the time. But yeah, it's great to see that the president is hating on my company CEOs. Now, I will say in his defense, I do think this is a little bit fishy, how he does bring on a lot of debt for the company, makes a lot of questionable decisions. I do think it is a little bit fishy that now he gets to retire with this huge retirement plan and he's literally set for life and he'll never have to worry about money again. So yeah, I'll let you boast in your opinions on both the Donald Trump tweet and also the $274,000 a month. Guys, imagine what kind of portfolio we could build if we had $270,000 a month to fund this portfolio. It would be absolutely insane. Okay, and then the last piece of news that we're going to go over, I wanted to go over the jobless claims. I just want to give an update every single week. So stocks slump at the open as 36 million jobs vanish in wake of coronavirus. Trump turns hawkish on China. So if you see here, if we scroll down to the article, in U.S. economic data, weekly jobless claims rose by 2.98 million in a week, ending May 9th. Hooray, guys, that is so awesome. We finally got under 3 million a week. That is so awesome. Congrats. I would like to congratulate our government and everybody working so hard that we only lost 2.98 million jobs this week. It is actually just insane. The new claims has also brought the new coronavirus crisis total to nearly 36.5 million over the last 2 months. By far the biggest loss in U.S. history, sending the unemployment rate over 15%. So about a week or so ago, I went over in a YouTube video the update for the jobless claims number. I looked at GDP growth, or I should say GDP declines in the US. I looked at GDP declines in the country of China. I looked at the unemployment rate. And the unemployment rate about a week ago before this jobless claims was about 14.7%. And now it is over 15. Now I do know one thing that I mentioned in the previous video as well, is that the real unemployment rate is actually probably higher than this, because these are the people that have applied for unemployment benefits. That does not count the people that did lose their job and did not apply for unemployment, whether they weren't eligible or they just don't know how, whatever the reason might be. So this number actually doesn't even tell the whole story. It might be 16, 17, it might be 20%. This is absolutely getting completely out of control, and over the last couple of days we finally started to see a little bit of a downturn because of this. The market has been so irrational. In recent months, the stock market has pretty much just gone in a straight line up. Now, we did have the fastest decline in stock market history, so I do think that that has a lot to do with it, is that it went down so much so fast. As you can see here, February 19th was the peak, and then the bottom was March 23rd. So a month and about 4 days. So in a month and 4 days, we went down, I think it was roughly about 30% or so, 33%, about a third of the stock market was lost in 1 month. So that is by far the fastest we have ever seen. So I think a lot of this recovery has strictly been for technical reasons. A lot of people on Wall Street manipulating the little guy, thinking it's going to go even lower. But to see that it continually goes up for about 2.5 months straight, it's getting a bit ridiculous. It's getting to the point now where it's getting so much higher that we're not even that much further from the peak now. We do need to get back to these levels. We do need to go back down. And I, for one, hope that we go back down on the stock market. Like I said, being a dividend investor, there's never really a time I will shy away from the stock market going down. I will just get bigger dividends and I'll get better future potential returns in the future. So 36.5 million, my hats go out to everyone. I know I have personally been affected by this coronavirus situation. My hours have been cut down significantly. That's part of the reason why I've not been able to fund my portfolio at the speed that I would like. But my hats go off to those 36.5 million and my prayers are going out to them. I hope that we can come out of this brighter than ever. But regardless, I will be buying stocks. It is really sad to see that this number climbing higher and higher. I know during the Great Depression, I think the peak for unemployment was right around 20%. Now, I do know this is a different situation because with the Depression, there were so many other different issues back then that we didn't deal with because the Federal Reserve was not really a thing back then, and the FDIC was created because of this. People were literally going to banks and were not able to get out their money. People jumping out of tall buildings on Wall Street because they couldn't handle the mental pressure of the money that they were losing. There were so many issues that were going on during the Depression that were not happening during this time around, but we also have our own issues, and who knows how good we'll be able to bounce back from this when the shutdown does end. Who knows, maybe when the shutdown ends, maybe this number will get cut in half, maybe it will only go down to 13%. If that's the case, things are going to get a lot uglier, and the stock market's probably going to trade sideways for several months, several years, but who knows, we might be able to bounce back from it, and the stock market will hit all-time highs. Either way, that's why I'm preparing. Regardless of what happens, I'm dollar cost averaging. I'm buying into the stock market. If we go down, I'm buying into the stock market whether or not we go up. It does not matter. But anyways, we'll be keeping up with this number every single week, and I'll be updating you guys next week on this number as well, and I'll be giving you an update on that. So last but not least, I'll close out these articles, and those of you that stay to the end, I'll give you an update on my portfolio, those of you that are interested. So as usual, we own still the same 30 companies, and I'd like to talk to you about what my portfolio is doing and also about the potential change I'm thinking about making. It's a very small change, but I'd like to go over it. First off, before I look at the gains and all that, I would like to say that we did earn one more dividend. We earned a dividend from Visa. It is one of the smallest in the portfolio. I believe other than Apple, it is the smallest dividend I received in the portfolio. We received a 20-cent dividend. Hooray. So that's good to see. We did receive our dividend from Visa, and that will be reinvested back into the portfolio, much like our small dividend from Apple. Getting these small dividends are a lot, but they do help in the long run. So let's look at the biggest gainers and biggest losers in the portfolio. So our biggest gainer is now Home Depot. Home Depot has performed very well over the last couple of months. Whirlpool, Apple has done very well. All of these tech companies, I believe Microsoft, yeah, it's starting to get on the higher end as well, and so is Visa. These tech companies are holding up the market, and it's pretty much keeping the market from going much lower than it should be. A lot of these tech companies have such high weights because they're trillion-dollar valuations. And then next we have the biggest losers in the portfolio. We have now 1, 2, 3, 4, 5, 6, 7, 8, 9 companies that we are now down on. And even one of my biggest holdings, if you look here at the Southern Company, we are now just about break even on it. I will go over that in just a minute. So now out of the 9 companies that I have, I would like to go over 8 of these first. So these 8 right here. These companies, I have no doubt whether or not they'll be able to hold their dividend. Out of these 8, before we go over Wells Fargo, these 8 here, I would say probably the one that is most risk at cutting their dividend is AT&T. But even with them, I don't think that they'll be cutting their dividend even with the $274,000 a month to their retired CEO. I think that at most of these companies, if not all of these 8, will be able to hold their dividend. And then that brings me to Wells Fargo. So the reason why I wanted to go over Wells Fargo is the issues that they've been having. And the reason why I wanted to go over this is not because I'm down on it the most. It's because I think it is the most potential risk to cutting their dividend. Now, that does not mean I'm selling it, but I wanted to tell you about the potential changes I might be making. I want to get your guys' opinion on it, and you guys can leave the comments down below and give your answer whether or not you think I should do this or not. So I am not selling this company. The only way that I would sell this company is if they cut their dividend. If you look here, at yesterday's close, they closed at a 9.06% dividend yield. And over the last year, you can see how they performed, and they're even breaking lows than where the stock market bottomed at on March 23rd. They were a $53, $54 stock, and now they're sitting right about half that price at $23 a share. And you can look over the last 5 years. They're now at an all-time low. I think I said an article was at an 11-year low is what they're at now after yesterday's close. They've had very good dividend growth. But I am really worried with all the financial worries and troubles that they've had that they won't be able to hold this dividend. So what I was considering doing, if I go back here to my biggest losers, is taking this percentage down, this actual versus target percentage, down to 4%. Now, what this would do, I would not sell my position in Wells Fargo down to 4%, but basically what it would do is prevent me for a while from making any future deposits in the stock, because I think this one is by far the highest risk right now of potentially cutting its dividend. So if they end up cutting their dividend and I lower this percentage down to 4%, what I would like to do, I would not like to lower this down to 4% to where I sell it down to 4%. I would just keep it at that 4.7, but I would just take the target down. And what this would do is, A, if they cut their dividend, then I would not want to own it in the first place, and then I could just sell it, and then I would prevent myself from potential losses, because when they cut their dividend, the stock prices also go down with it. And two, if they do keep their dividend, it's not hurting me at all. I still have the same amount of shares that I own, but I can put it in companies that are at a lot lower risk of cutting their dividends, like these stocks right here. Because the main reason that we have this portfolio is the dividend growth portfolio. We do not care about this market gain. What we care about is this earned dividends. I do not care what this number right here is. As you can see here, it's at $75. That's not very big. The other day, it was like 200 and something dollars. This might go in the red. It's very likely that this market gain will go into the red at some point during the next couple of months. It is very likely, but that doesn't matter because we're focused on this number. So let me get your guys' opinion down below. Do you think I should lower my target percentage down to 4% on Wells Fargo? And if I were to do that, what stock should I be increasing my position in? There's so many other stocks in this portfolio that I love that I wouldn't care about increasing my position in. Or we can add one of the four that I talked about in one of my videos a couple of weeks ago, talking about dividend stocks that I'm watching. Target is one of them that I'm watching. Extra Space Storage is one of the one that I'm watching. CubeSmart is one of the ones that I'm watching at 5.5%. And last but not least, I've been talking about this one for a while, Honeywell, which is about a 3% dividend yield now. I'm sure after today's drop, that'll be over 3%. So you guys comment down below, give me your opinion, and thank you guys so much for watching. I would like to mention one more time, 7 referrals. 7 referrals is so much better than I ever could have asked for. I am so happy. I am over the moon. They said it usually takes about 7 to 14 days for the money to be credited to your account from your referral links. I know the first 2 or 3 happened about a week and a half ago, so I should be getting those any times now. And thank you guys so much, especially during a time right now when my hours have been cut down and it's hard for me to fund my portfolio. I can still help average down on my positions for my dividends and also the $70 I will be receiving from my referral links. You guys that do receive the $10 in your portfolio, send me screenshots, send me links. Let me know who used it. Let me know down in the comment sections because I would love to see who used it and what kind of dividend stocks you're buying, and maybe I can help you get started. But anyways, guys, I'd like to thank you guys so much for watching. If you have any questions for me, I would like to go over it in the next video that I have. I will be answering some questions in the next video, so I will be going over that. So comment any questions you have about the market, any stocks you'd like me to go over, any dividend stocks that you own, questions about my portfolio, anything of the sort. Thank you guys so much for watching, and I'll see you next time.